Hi everyone, welcome to this business education and research. In this video, let us see the concepts of break-even point analysis, its advantages, assumptions, and calculations. Break-even point is the level of sales revenue at which the company recovers its total cost and there is no profit or loss. The break-even point can be calculated in terms of units or value of sales. The break-even point analysis is a financial analysis in which we calculate the variable cost and fixed cost and determine the units to be sold at a given selling price per unit to recover the total cost without incurring loss or making profits. Now let us see the advantages of break-even point analysis. Banks and financial institutions need break-even point analysis for taking lending decisions. Break-even point analysis is the backbone for taking key business decisions such as new projects, new products, new technology, modernization, expansion, etc. The break-even point analysis helps in capital structure decisions. If the break-even point is going to be achieved only after getting a sizable market share, the volume of production or certain period, then the management may go for equity capital rather than debt capital because it is difficult to pay interest on loans without surplus revenue. The break-even point analysis helps in product mix decisions. If the product which can achieve break-even point comparatively with less market share or volume or short period is considered as profitable one. As the current business is highly dynamic and product life cycle length is changing, it is better to select a product with a short break-even point so that the company can minimize the risk of product being outdated and obsolete. Break-even point helps to predict profitability and return on investment. Break-even point analysis helps in pricing decisions. If the company can wait for a little longer to achieve the break-even point, it can fix lower selling price and beat the competition. Break-even points tells you the number of units to be sold or level of sales to be achieved to recover the cost. Therefore, the management can easily fix the sales target to be achieved. Now let us see the assumptions of break-even point analysis. The total fixed cost remains the same at all levels of production and sales. However, the fixed cost per unit will come down when volume increases. That is why the company earns profit when the sales increases above break-even point. The total variable cost vary according to level of activity, but the variable cost per unit is constant at all levels of activity. Another important assumption of break-even point analysis is that all the expenses and cost can be categorically segregated into variable and fixed cost. The reality of the presence of semi-variable cost is ignored in BEP analysis. The break-even point analysis is assuming that the selling price per unit is constant at all levels of sales. It ignores the practice of reducing the selling price on bulk and wholesale orders. The break-even point analysis assumes that the company maintains the same product mix. Another important assumption of break-even point analysis is that other factors such as efficiency, productivity, and technologies will not change. Now let us see the calculations of break-even point. The break-even point can be calculated in terms of units or in terms of sales value. If you want to calculate break-even point in terms of units, let us see the formula. The break-even points in terms of units is equal to total fixed cost divided by contribution per unit. The contribution per unit can be calculated by taking selling price per unit and deducting the variable cost per unit. Then, if you want to calculate the break-even point in terms of sales value, you have to use this formula. Break-even point in sales value is equal to BEP units into selling price per unit. So therefore, if you want to calculate break-even point in terms of sales value, first you should calculate break-even points in units and multiply the break-even point units with selling price per unit. You get the total volume of sales, total value of sales. Now let us see an example of calculating break-even point. The details of the company is given here. JB Bells is a small-scale business unit which is planning to produce buckles for the belts manufactured by them. The company needs to find out the break-even point of production. The estimated cost details are given. You are required to estimate the break-even point level. Also note that after considering the competition, the company decided to fix a selling price of 200 per unit. So from this, important point to note down is the selling price unit, that is 200 per unit. So the fixed cost is given here and variable cost per unit is given here. The fixed cost in the sense whether the production is low or high, the fixed cost will be the same. So there are cost of establishing production premises, machines and equipments, furnitures and machine tools and other equipments. So these are all the various types of fixed cost, and the total fixed cost is 990,000. On the right side you see the variable cost per unit, total cost per unit, variable cost per unit. Stainless steel materials and components for each unit is 80. Wages for each and every unit is 30. Power and fuel expenses 10. Other direct expenses 15. So the total variable cost of producing one unit is 135. Now let us see the actual calculation of break-even point. Break-even point in terms of unit is equal to total fixed cost divided by contribution per unit. Contribution per unit is equal to selling price per unit minus variable cost per unit. So therefore, to find out BEP in terms of units, you need two information. One is total fixed cost, which is available in the question. Example, contribution per unit is not given, but we can calculate. How do we calculate? Contribution per unit is equal to selling price per unit minus variable cost per unit. So both these informations are available in the illustration. So therefore, contribution per unit is equal to 200 minus 135. 200 is the selling price per unit, which is already given in the question. And variable cost per unit is also available in the question, that is 135. So 200 minus 135 is equal to 65. 65 is the contribution per unit. So now we can easily calculate break-even point in terms of units. BEP in units is equal to the total fixed cost 990,000 divided by the contribution per unit, that is 65. So therefore the break-even point is 15,231 units, meaning if the company produces 15,231 units and sells at the rate of 200, the revenue, total revenue and total cost will be same. If you want to calculate break-even point in terms of sales revenue, you can easily calculate by adopting this formula. Break-even point in terms of sales value is equal to BEP units into selling price per unit. So BEP units is already calculated here. So 15,231 units into selling price per unit, that is already given the question. So therefore, this is the total break-even points in terms of sales value. Now let us say the verification of break-even point calculation. The sales revenue at break-even point is 15,231 units. This was already calculated by us. So selling price per unit is 200. So therefore, break-even point units multiplied by selling price per unit, you get the total sales revenue at BEP level, that is 30,46,200. Let us deduct the total variable cost. So total number of break-even point units multiplied by variable cost per unit, you get the total variable cost. So 30,46,200 minus 20,56,200, you get 9,90,000 as total contribution. That is sales revenue minus variable cost, you get total contribution. So from total contribution, if you deduct the total fixed cost, that is 9,90,000, that is given in the question, you get 0. That is, there is no profit, there is no loss at break-even point.